secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
So a huge congratulations to the entire team for what they've done with their Fin P2P project, especially to Onera. And thank you so much for sharing it with us. Now, our next discussion will be discussing central banking digital currencies. And they've become quite the talk of the town this past year, with obviously China, even the Philippines, and even the private US companies like the Mastercard really getting involved and experimenting with the endless possibilities. So next up, we have a discussion that I'll be leading myself as I chat with Dr. Omri Ross of eToro, Nitin Gaur of IBM Blockchain, Jalak Jobanputra of Future Perfect Ventures, and Daniel Eidan of R3. And we'll be taking a look at the development of CBDCs, its adoption to date, and also some various use cases being implemented in the sector. So everyone, thank you so much for joining me for this discussion. I'm really thrilled to be on a panel with all of you. And maybe just to start, it would be great to give our audience just a little bit of a run through of maybe some of your prior and also your current work experience in just one or two sentences that really help position you for this conversation that we're about to have today on CBDCs. And maybe Daniel, would like to start with you.
Sure. Thanks a lot, Jessica, and thanks for having me. So Daniel Eidan, I'm a solution architect with R3, and we've been fortunate enough to be involved with the CBDC work for quite some time. So I really picked up probably around with Project Jasper about almost 4 years ago now. Project Jasper with the Bank of Canada evolved to Project Jasper Ubin with the Monetary Authority of Singapore. We've been involved in Inthon Line Rock with the HKMA and the Bank of Thailand. We're currently involved with Riksbank's retail CBDC project, with the SMB, with Project Helvetia, with the BIS, and with the Banque de France with their CBDC project as well. So lots going on, and it's incredibly exciting to be part of this space.
Lots going on, you're absolutely right. And maybe, Jalak, maybe we can turn to you now and just get you to introduce yourselves to our viewers today.
Sure, I'm Jalak Jobanputra. I'm founder and general partner of Future Perfect Ventures. We're an early stage fund that I founded in 2014 to invest in decentralized technology, and obviously blockchain tech and cryptocurrency make up the bulk of our portfolio. We're early investors in companies like blockchain.com, Blockstream, BitPesa, Abra, The Graph, and Dot. We really operate at the intersection of public and private applications of blockchain technology, and have maintained the thesis that it'll be on par with, or at least 10x of the opportunity that internet provided. And we believe that CBDCs are certainly going to be part of the story.
Well, it's great to have you join us today. And Nitin, maybe you can give our viewers just a little bit of a short summary on yourself now.
Thanks, Jessica, and it's really glad to be here. Really glad to be with the panel. I've been in this space for quite some time. I founded Blockchain Labs, and subsequent to that, I founded Digital Asset Labs. In my current role, I serve as Director of Financial Sciences and Digital Assets. And similar to Daniel's experiences, my team early days, this is the phase one of CBDC, delivered about 19 plus different CBDC projects. Project Salt, which was in Brazil, Project Arbor, which is the most recent work we have done in Saudi and UAE. Bank of France, we had some engagement there as well. Early days, we also were involved with Jasper and Ubin. So I think we have a similar journey in terms of seeing the evolution, both evolving from a wholesale RTGS systems and moving towards more retail-esque systems, and addressing everything in between those two. So really glad to be here and looking forward to exchanging your perspective.
Great to have you too. And finally, Omri, it'd be great for you to introduce yourself as well.
Yeah, so nice to meet you all. I'm Omri Ross. I'm the Chief Blockchain Scientist of the eToro Group. I joined after they acquired my previous company. And as part of the work, we are sort of opening the market for 20 million plus users to actually be able to easily trade a variety of assets. Apart from that, I lead the Financial Transparency Group at the University of Copenhagen, where I work as Associate Professor, where we lead different research around DeFi technology, KYC, and automation of financial contracts and derivatives using DLT and blockchain technology.
So I'm really excited to see where the conversation goes. Thank you all so much for the introduction. Now I'm going to jump in and just ask, and Nitin, I'd like to start with you, discussing the key arguments for implementing a CBDC with DLT and also blockchain technology. What is your outlook on this?
So we started the journey as a resiliency strategy. We've had failures in RTGS systems, and every time there's a failure in payment systems, it sort of it blocks the economy from moving forward. We've seen early days failure, which is the genesis of early days Ubin, is to address and induce resiliency. But there's also an element of moving the payment systems and moving the overall economic agenda from keeping up with the digital times. I mean, you have a massive increase in volume of transactions, you have massive increase in digitization of the commerce and the capital markets ecosystem. And the payment systems have sort of resided in that space of dealing with moving the relay of the batch system, as we call them, in the background. So I think the way we are looking at this is keeping up with the times, modernization of payment ecosystems, providing resiliency in the ecosystems, and going towards real-time movement of assets. And that's something which is the genesis, and we'll, I'm sure, discuss more in terms of inclusion of stablecoins in the ecosystem, is to address the need for real-time, payments and real-time sort of fungibility that's needed in the digital asset space. And I think that our projection is that we have now, from a BIS report, about 80% of all central banks in the world looking at digitization, whether DLT or non-DLT, and we see this massive movement forging ahead. One, modernization. Second thing is addressing the real-time payments agenda of many countries.
And what needs to be addressed certainly isn't an easy task at hand. There's enormous amounts of work to be done as well. So thank you so much for your answer there. Now, Daniel, I'd like to turn to you because you have a slightly different outlook to Nitin. And I'd like to ask you some of the economic advantages, but also some of the risks that come with rolling out a CBDC, and especially focused in emerging markets.
Yeah, thanks, Jessica. Well, I guess I'd start by saying the risk is that it can't fail. I mean, it's really that simple. When you're talking about central bank digital currencies, when it's launched, it has to work. And I think that's a very kind of adversarial environment to be doing innovation in. I think the broad theme of innovation is, do it quick, break things and move fast, and that iterative cycle. And I think it's interesting kind of seeing the risk-averse central banking community and by and large, kind of the financial community engage with this type of, agile process and innovation. When I think about kind of the business use cases and the drivers, I guess I would split it up between retail and wholesale. And Nitin did a great job of kind of ticking the box on a lot of the wholesale use cases. The only thing that I would add there is it's not just about instant settlement. It's also about atomic settlement. When you think about the world that we live in today, and I can't not pay attention to the fact that this is part of the Security Token Summit. So why are we having a conversation around central bank digital currencies as part of a Security Token Summit? Well, when you pay for something, especially in the wholesale world, you're paying for something. And today we have systems for custody for digital assets and assets at large, and then we have a completely separate system for payments. And the idea is if we could bring these two things together and create atomic transactions, meaning that one leg of the journey, the delivery of the instrument or the security, only happens if the payment is executed against it. Creating an atomic structure for that would eliminate a lot of risk that's internally kind of clogging up the system today. So outside of that wholesale use case, I would add on the retail side, a lot of economies are seeing a decline of cash. I think that COVID and the unfortunate pandemic is definitely kind of accelerating behavioral change. It's interesting. Some economies are seeing a decline of cash, like in Sweden with Riksbank's work. Some economies are actually seeing cash pick up. I think that the reality that central banks are faced today is that at the end of the day, retail users, people like you and I, don't have digital access to a central bank liability. And that has different implications depending on where you are in the world and whether or not you're included as part of the financial system, which is ultimately the gateway to the digital economy, or not. So, the Bank of Canada, for example, is looking very seriously at a retail CBDC. That's probably more of a reaction to Libra and other large private actors, because at the end of the day, as a Canadian citizen, I have access to digital cash, at large. Whereas, maybe some of the work that we see in more remote kind of emerging economies, it's more about the resiliency of the ecosystem. It's more about the cost of payments. It's more about getting access to unbanked or poorly banked individuals. Things like that are really driving factors on the retail side.
Fantastically put there, thank you. And Jalak, I'd love to turn to you now, because obviously Daniel's identified the difference between wholesale and also retail there. So maybe if we focus on retail a little bit more, because a lot of people could argue that is probably where one of the main challenges of implementation comes through. When it comes to some of the main challenges, what would be there for retail CBDC in your eyes?
Well, look, I think that we need to pay attention to the privacy implications. I believe that CBDCs at the wholesale level and the retail level have a lot of potential in terms of getting people involved in the financial system, of being able to borrow money at rates that that make sense, that there's not this tax. The less money you have, we've seen that happen in the United States as well as around the world. But one thing that we pay very much attention to, and a lot of entrepreneurs that we work with want to make sure that all of this kind of inclusion doesn't come at the cost of privacy. And certainly we're interested in investing in companies where entrepreneurs are very aware of using the latest technology in a way that offers, fungibility, the access that CBDCs can provide. Also understanding that this is a way for central banks to control their money supply and track it in a way that cash, really can't do. So I would say that's one of the things that we pay attention to as we look at the rollout of these CBDCs.
Fantastic, thank you. And now, Omri, I'd love to turn my attention to you now, because I think one of the crucial elements here is interoperability, and it seems to be such a pressing point of this discussion. So maybe just to start, how would you define this? Because every answer is potentially different, especially when it comes to CBDCs.
I will, but if you give me a second, I want to comment on Jalak's comments before, because I really got connected to what you said in terms of privacy. I want to say there are a lot of very interesting sharing key techniques. Some of them are actually built by many of the people around here that can actually offer you a lot of that, a lot of sort of the benefits of real-time seeing transaction by central bank, by at the same time agreeing on a group of signers that can together sort of recap the KYC or whatever, or partial KYC. And in many elements, also if we think about today's system, a lot of officials have access to a lot of private information of people when they actually check them. And we can use a lot of this also to protect that. So I think you made an amazingly nice point, an important one. But I think also the technology, if executed right, as well as Daniel mentioned before, can actually solve a lot of really nice stuff. Back for your question, sorry, Jessica. So interoperability is a major thing, and we see it also in sort of much in other markets. I think Jalak mentioned before DOT and other projects that are actually really focused on these areas. And I think these are very interesting because you know how hard it is to coordinate things, right? Politicians exist because it's almost impossible to coordinate among things. And I think in these areas, we want to see much more standardization of how you will actually execute this interoperability specifically from central banks. And we can also be really interested to see how it will actually work. I mean, one of the key elements that was mentioned by Daniel is the implication of being atomic swaps, or which practically mean that whenever you're moving some asset, possibly between two different central banks or between two different providers, they can actually happen at the same time and getting all of the guarantees. These are one of the technological challenges that we see in many blockchain-related projects. And one of the areas where I'm sure that there will be very different of opinions around the panels is where that should be. Now, I'm obviously a huge supporter in transparency and a huge supporter in giving more roles for individuals. And I think a lot of the financial sort of services has been for a while, let's call it putting bricks in the way of retail. And I think, these things have to happen extremely carefully, but I think we should also be very careful when we create these bricks. And I think that if we use a lot of really good tools of using right way of using cryptography and hiding issues around transparency, again, going back to what Jalak said, I think we can see a lot of it in the public blockchains. I think there is, of course, ways to connect public and more private DLTs, but I think for the sake of transparency, I would think that I would go on very hardcore cryptography, a lot of challenges in knocking them out, but I would definitely support the public sort of elements. Maybe roll it back gradually to check out that these things are really important, but I really see the future is adding transparency and open a bunch of interoperability possibilities within the public space.
And I'd love to get someone's thoughts there on that coordination from Omri. And I can see, Nitin, you're desperate to answer, so please go ahead.
So I've spent, to Omri's point, I classify interoperability into 3 different buckets. The first bucket is the technical currency, or I would say technical debt, which is the system. We have a system that works. We have, every central bank has an RTGS system. They have a retail distribution system. And these are systems that have been evolving over the past 50 plus years. And that technical debt is still, that needs to be addressed. And then you have things like Omri's talking about, which is the interoperability between DLT systems, which is protocol level, consensus level. So this is like technical things that we need to address in terms of how do you have 2 different systems that can talk to each other. The second bucket that I would like to address is financial interoperability. And this is something which we learned in Project Arbor, is when you look into cross-border payments, when you look into atomicity of using currency as a fungible asset between different asset classes, whether it's digital securities or bonds, and all the conversation that Onera had previously in FinP2P, a network, you still need a fungible unit. And when you bring that fungible unit in, you have the notion of FX and exchanges and desks that deal with things like arbitrage, and how do we sort of move this fungible unit between different systems. So that's the financial interoperability, which is taking this cash or digital fiat into various systems in a seamless way. And the third bucket, which has taken majority of my time, is around interoperability between existing systems. These are treasury management systems, cash management systems, financial institutions who are designing the systems based on the traditional way of doing batch processing and reconciling these batch systems, and the various systems that are connected by relay of batches, which allows us to move value across the systems. And now you have this digital fiat that shows up as a tokenized asset, which doesn't adhere or conform to any of the old way of doing business, but they still have to coexist. And so you have various business layers, and Circle has done an amazing job, I think, in providing a business layer on top and saying, let's let the system coexist till we are sort of ramping up the system. So looking at these 3 buckets, I think the overall system integration, and I'd love to hear Daniel's thought because we're in the same boat from enterprise perspective as well, is a Herculean task, not just from investment, but the army of skills and army of sort of folks who are needed to solve this problem. And FinP2P has done that for digital securities, but we need to address that at a banking back office system which still exists and runs. I'll pause at that and love to get opinions from the folks here.
Mm-hmm.
Yeah,
Daniel,
I can come in on a little bit on the interoperability. Nitin, I think I have a similar kind of taxonomy to you. I also kind of have 3 categories, and I won't go into it, but the way I would look at it is there's a notion of horizontal interoperability and vertical interoperability. Some of the things that you're mentioning, so if I start from vertical interoperability, this solution for a CBDC needs to live within a vertical stack. It needs to connect downwards underneath the stack to core banking systems, payment systems, treasury systems, and so on and so forth. And it needs to connect upwards into merchants and retail wallets and so on and so forth. On the horizontal level, Omri, the things that you're talking about with interoperability are very much horizontal, the ability for 2 different protocols to talk to each other. I think about that kind of like taking a file from a Mac and loading it up on a PC, something that, we need to remind ourselves that wasn't possible when those 2 different disk formatting things were first available. Now it is. And then a layer on top of that, that's really about the business processes. And that's more akin to running Zoom on a Mac and a PC. So horizontal interoperability can be achieved at a business kind of application level. It can also be achieved at a platform level. And then you have the vertical that kind of cuts across both of those. And I think that every one of those is, to Nitin's point, almost every one of those is a Herculean effort. So there's a lot of work for us to do. Maybe another thing quickly to mention that Omri kind of teased, and I think that may be something that we have a little bit of a different perspective on. When you think about kind of public ledgers versus private ledgers, I would argue that it's not as binary as it seems, and there's different degrees of public and there's different degrees of private. And I think the loudest people in the room always live at those 2 extremes, the idealistic public people and the idealistic private people. And I want to kind of present that as a trade-off. And it's interesting, Omri, that you said in the same sentiment, you said, I believe in public ledgers and I believe in strong cryptography. And I think that tying those 2 things together are really interesting because when you live in a public space, as you go along the spectrum to something that's more public and lives in a more adversarial context, you need to pay a higher premium for cryptographic methods to protect you. As you move across, you get to a place that's more regulated and more private, and you pay less of a cost from a cryptographic kind of hardening standpoint. So just to kind of break the mold on the public-private binary debate, I think that the more nuanced approach, I think we should kind of mature ourselves to that more nuanced approach where it's not black or white.
But I would like to comment for a second, because I think it's really interesting. And I think that the way I foresee it, at least for me, is I look at it because you mentioned verticals, and I got the vertical, the horizon one. But I wanted to look at everything as transaction, because everything financial eventually is a transaction. You transfer something to someone in some sense. And I think if you put that transaction information, right, in a way that is publicly available but encrypted enough, which means people can, at the right time, the right way, the right keys, undone that, but at the same time, stream this information live. I think it's super powerful because it gives you transparency to the next level on each transaction. You know, again, you need to be very careful on the encryption level, but I think that's put also the full financial system in a much greater transparency that we've seen today. And I think the potential of it is very strong. Sorry, I'll let you just continue.
Hard to argue with that, absolutely.
Yes.
And Jalak, I'd like to turn to you now and just ask, because we're talking about these kind of coordinations and you guys have talked about the different funnels and streams. When we look at these among different countries, but also stablecoins and CBDCs for kind of cross-border implementations, what are some of the coordinations that you think we need to see there?
Yeah, I mean, just listening to this conversation, it's so in the weeds, and you know, taking a step back in terms of what we're really talking about here, which is, you know, almost kind of, I wouldn't say rebuilding the financial system, but rewiring it in a way with you know, monetary policy and money is like one of the strongest tools of government. So I really look at, you know, CBDCs with, you know, government issued CBDCs as a whole separate category, and like middleware and the retail applications. And if you look at retail applications, those are being built all over the world right now, already kind of issued. They may not tie into that back end of a CBDC yet. But I think they can be built in parallel. I think it's going to be a long time before we see real interconnectivity and interoperability of CBDCs, just because of what a political tool, you know, money is. We'll start to see regional, and I think this is why we saw so much interest, and we're seeing interest from China, right? And it's a geopolitical tool. Monetary policy is a geopolitical tool. So to the extent they can bypass the dollar, which has been the kind of de facto world currency for so long, you know, that is attractive to build these networks. So I believe that governments are going to have more and more competition from you know, other cryptos. Whether it's a company issued cryptos such as DM, and I would say that DM has really kickstarted the conversation, the Facebook initiative, and things that are completely decentralized, like Bitcoin, and so it'll, like, what I'm really watching is how that interplay is going to happen over the next few years. But I don't, you know, I think it's the governments that recognize that. Are going to be the most successful with their CBDC efforts.
Really interesting point there. Nitin, it looks like you have something that you'd like to add on top.
What Jalak mentioned. So if you look at genesis of stablecoin, and I actually built a payment network for 2 years called IBM Worldwire, where we're trying to sort of solve the remittance problem similar to what many of our cohorts were doing in that space. And we introduced stablecoin. And my selling point to large banks is, why would they want to issue stablecoin, was you're future-proofing your infrastructure. If we have a rails to move tokenized fiat in any form, and it happens to be stablecoin, tomorrow it happens to be CBDC, you have the infrastructure that allows you to move an instrument of sorts. And so stablecoins today are centralized IOU models. But if you go to take a step back and say, why did we have stablecoins in the system to begin with? And they provided fungibility. They provided sort of coexistence model to somehow provide a valuation or universal valuation mechanism to this massive emerging crypto, you know, ecosystem that's evolving. And I believe that this will continue because the fact that attaching stablecoin to a sovereign currency, you're still, no matter how decentralized the infrastructure is, but the model there is still centralized because you're still tied to a USD or Euro or Yen or any of the basket currencies of sorts. So to me, whether it's stablecoin or CBDC, it's still a coexistence play until this vision of what we all have been talking about becomes a completely decentralized ecosystem where many of these crypto assets become their own fungible units. And that'll be an interesting evolution to see. But everything now that we're doing with CBDC, stable coins, tokenized fiat, these are all interoperability play for us to coexist and move on and off the banking ramp, which allows us to be able to move liquidity back and forth, I think. But I'll pause at that and get Omri and Daniel speaking as well.
I can comment and say that one of the really interesting things will be the involvement of the concept of credit risk as a result of different sort of issuers of different assets. I mean, obviously, some of them are central banks, but some of them can be just any issuers of stablecoin. And I think that some of the issue of the credit is integrated into the asset itself. For example, if there is a centralized issuer, like in most of these cases, some of it can actually be even in the blockchain protocol, which means we could, if we think about one of the nice things about blockchain is the way they work with reconciliation of ownership of assets. But we could also introduce credit systems into the protocol itself to actually imitate the way payment services work today, which means if I make a $5 coffee purchase, yeah, I'm living in Denmark, it's pretty expensive to buy coffee here, then I would still be in a situation that, the credit risk on that transaction is not the same for purchasing a house, right? And in the world of blockchain today, most of these differences actually do not exist. So I think it's both on the protocol layer will be interesting to see what happened there, as well as on the issuer layer.
Fantastic. Well, thank you. That is all that we have time for. I would have loved to keep this conversation going on for so much longer. It seems there's so much more to be had. But thank you all, Jalak, Daniel, Omri, and Nitin for your insights there. And I really hope that we get to carry on this conversation at some point in the very near future. Thank you.
Thank you.